Welcome to Get Serious. Jumping back in, recording this one right after the Thanksgiving holiday. Really haven't taken a more extended, kind of restful break like that in well over a year. And my wife and I remembering a year ago we were using that weekend to potty train our daughter. So that was like the complete opposite of relaxing. It was nice to step back a little bit. Hopefully similar to you all as well. Seems like it's only, one of the only weekends, if the only one in the U.S., where almost the entire country kind of collectively takes a little bit of a step back, outside of if you're in the retail industry as well, or in any case. So with all of that in mind, we were assessing the market pretty thoroughly for one of the larger projects we've been working on this year is this Louisiana subdivide. I've talked about it a number of times, roughly 32 acres split into 3 child parcels. A lot of value add done to it, driveways, culverts, whole 9 yards. Utilities are at the street, so all you need to do is place a house pad and you're all set to build on that thing. Well, all 3 of them rather, and just high quality assets, but the market has just been really, really tough. I mean, that's a story for a lot of parts of the country here, but I think especially in this area, I mean, just assessing it, we just have had some near miss or, some potential strong buyers that are still in the game, but not submitting firm offers here yet. And it's just a natural part of a buyer's market, right? You have to kind of play by the rules. I wrote about this for today's newsletter once you have a chance to receive it, some of my 2026 macro predictions. So I won't step on that too much. But I really don't perceive most real estate markets getting much better next year. If anything, I'd expect them to soften even further. It's kind of tricky, right? Where pricing will solve issues of moving properties 95-99% of the time in our experience, assuming there's not something glaringly bad from a characteristic side of things, kind of regardless of seasonality, especially in the South or the West. I mean, there is some seasonality around the holidays, but we've traditionally had very strong Decembers from a dispo perspective. So I'm cautious about holding back and not expecting really any sales during these times, but you also have to be strategic. It's the more price cuts you may do with certain properties, it just puts additional black marks on the property from a buyer's perspective. So it's you don't want to be leaving money on the table, but how substantial of a price cut is enough to get something to start getting more activity. And we're based on the online data, and even some of the site visits we've gotten, we're right on the verge in what I would perceive to be stronger potential buyer activity. But again, even though we are such specialists in underwriting, the market can just so oftentimes just surprise you or kick you in the nuts, so to speak. And you just have to deal with the realities that come your way, regardless of how good your underwriting might have been in the first place here. And when I was assessing the market earlier today, I mean, there were 2 sales of over 5 acres in the relative area that we're operating in that were north of 5-acre sales. A lot were kind of below 5 acres and just lower price, not as premium properties, and just so much inventory on the market. And it's substantially different from when we underwrote these properties approaching a year ago, close to, I think it came to us in maybe late January of 2025. So yeah, it's about a year. And where I would have underwrote those properties if we only got this property today, compared to a year ago, I would have probably taken off, between 12 to 20% of the anticipated exit per acre pricing, compared to what we underwrote a year ago. It's just, you have to undercut more now looking at today's inventory and just again, the lack of sales. It just changed on a dime. Markets don't always behave like that, but it's definitely one of the tougher ones we've seen. in quite a while here. And so it's like, luckily we still have so much downside protection, and it's very unlikely to lose money on these lots and still have a lot of room to go. Like, they're still priced over 2x of what we are all in on them at, low carrying costs. But nevertheless, it's like, okay, if investor involvement, you're always trying to get the best price for qualified assets, but also being mindful of the market, close to 6-ish months in for one of the three lots, 5-ish months for two of the three. Just trying to figure out, okay, what's that right pathway here? And so we're doing 10% cuts on two of them and like 7.5% on our most premium lot as of today. And I think that's going to put us much more in range. Like, there was an argument to, like one of the lots was listed for 315, for instance, and there was an argument, okay, yeah, you could lower just under 300K, because a lot of buyers will have price alerts, especially north of like 200-ish K, set for like 25K increments. So if you're doing a cut from like a 320 to a 310 or something, it's really not going to be beneficial to you, because you're not hitting that threshold. Like 25K tends to be where those alerts are set. So you have to kind of keep that in mind as far as a strategy here. And so I'm like, yeah, we could do that, but if we did a full 10% cut, it was going to bring it down like 283. I'm like, 15-ish K difference. Like, it's just not that much, but it could bring the right buyer into us here. Like, I need to get some type of movement on these properties. So, okay, let's cut it to that. One of them we were bringing down from 360 to 324, and then one of them from 427 to 399. That's our most premium lot here. And still would be a great blended exit even around that. Even if we blended, I mean, just to give you an idea, like, to break even on these, we would have to sell for like roughly 160-ish net return for each lot. So like, we have still quite a ways to go, quite a ways to get to that level. So like, still very downside protected. And I think, again, we're right on the verge there, but you can probably hear it in my voice and just like the back and forth going on. It's what is the right tactic to do in a very tricky, like really nasty buyer's market. And how do you know you're making the right move here? Again, if we were longer term holders, the taxes on these are like $2,500 a year, like really low holding costs. Like, you could hold these for like 5 years and be fine, but that's not our game, right? Like, we have investor money, we have preference on the capital invested here. Like, we want to turn these over, keep growing. It's at like, okay, where is that right pricing we have to strike? Because otherwise, from a marketing side, like, there's nothing else we really haven't tried. Like, we're on across, every single platform, all the Facebook groups. We have tons of physical signs. We did a whole bunch of outreach out to neighbors, cold calls, cold texts. Like, we tried pretty much every lever that I'm familiar with, outside of like the more expensive ones where you could like host buyer parties or do radio ads. So like, we don't have the budget to do that. Like, that's a really expensive play. But anything that's like relatively budget conscious, like we're taking advantage of. Our broker's just been on top of this from day one. So it's not a broker issue either. We're about to re-up for another 3 months here, because I do like the incentives. We only signed 6-month listing agreements. We need to redo. Let's cut that in half, and just like, we want to keep everybody on the same page. If something hasn't moved in 6 months, like, okay, well, let's really try to figure out how to pick up the pace here. We're probably not going to get the best return that we were hoping for, but we have to adjust to what the market reality is in front of us. Like, you can't rationalize your way through difficult markets. You just got to find a way to get the right price to get accepted by buyers that are just deeply on the sidelines. And one thing the broker was remarking is that even these, and it's a more affluent area, and even these higher income buyers, they're more capped at the moment of like, they're willing to put CK all into like a residential build out. That's inclusive of the land as well as what they're building the house on. And from a land perspective, that means that they're capping out closer to that 300K number. So then they have 450-ish for a full improvement on a high quality piece of land like that. So with these price drops, we're getting like right in that range where it seems we should get some more triggers based on that data point. And like, we've had 2 super strong buyer leads that were anticipated to put offers down on all 3 parcels, like within the last few weeks. But, holidays and who cares what the excuses are. It's just been hard to solidify. One of them is a personal relation of our broker here. We're still working on that one. But it's like, you can't wait around forever too at the same time. So I just wanted to kind of share this a little bit more meandering update because I spent most of the morning reviewing all of this. Just to, again, I'm like, dispo is always the hardest problem with this business. I'm sure you have a similar situation or have dealt with something like this. So I just want to at least share our thoughts on how we're trying to put all the pieces together, and also show, it's just sometimes you're pretty much all the time you're not going to have a complete information to look at. And especially like nowadays, like if you were more bullish heading into next year, which I'm not, you could potentially just hold across the holiday season into spring. And we have done that for previous assets, but I just do not think the market in most areas is going to improve. In fact, I think it's going to, still stay status quo or worsen across a lot of markets next year. So I'd rather just not play that waiting game. I hope I'm wrong, because then it's just way easier to move stuff. But that's not the bet that I'm making right now. And we'll kind of see how that plays out. But hoping this can spur some activity, and I can share some other news on what might have worked for us, and hopefully help you all out as well here. But that's the nature of dispo. You gotta pull some levers. Usually the best, almost always the best lever you have to pull is price. Let's just make sure, again, your buy price is always low enough that it allows you to pull that pricing lever as many times as you need to get something to move and not bankrupt your business. That's the simple side of it. But in practice, hard to execute on. So keep that all in mind. Land.capital for any of your funding needs, 50K plus. I mean, we're still very active. I mean, again, reviewing millions of dollars of deals. Made an offer on a 450K-ish potential subdivide last week. So like if there's opportunities to strike, we're going to go after them, even being mindful of, very difficult buyer's market. You just got to adjust. You can play in any market here if you know what you're doing. And land daily diligence. I'm going to review some other deals that just came in as well. Other potential subdivides here. Subscribe and share, everybody. Take care now. Talk to you next time.